All right, folks. Um, Welcome to this week's Forex commentary, and yeah, happy new week to everyone listening. So, last week I was talking about dollar index, and the commentary was bullish on dollar index, and you know, but of course, I, you know, when we were going through the weekly time frame. I was looking at price action dollar index, and I said quite a few things on DXY. I was talking about how the prior week's candle wasn't convincing enough, and we had to wait until CPI. But regardless of everything, I wasn't entirely surprised when dollar index traded bearish last week, but because all through this week's, we've been saying one thing that, dollar index is, bullish based off of the high time from institutional order flow, but we haven't seen anything really in terms of market structure, in terms of price action to validate, the high time from institutional order flow on dollar index. But regardless of that fact, there is something that's always telling is the fact that all of this premise through which I run my analysis is based off of the high time from institutional order flow, and I've sort of like built a system around it, and it doesn't matter if currently markets are not moving really the way I think they should, because on Monday, after I dropped the commentary on YouTube, I saw ICT's post on YouTube, and I checked it out, and ICT was bearish on dollar index. In fact, somebody I respect so much, right? And he was looking for sell side objective here, one, and sell side objective here, two. And it was kind of like crazy because that was the first thing I saw on Monday, and I was so locked in at the start of the week just to find ICT bearish on DXY, and it made mention of the fact that it's someone is likely to think it's bullish after they traded through sell side here, and which was one of those analyses I did in the commentary, and he said. He talked about everything going on in the United States and stuff like that, and he said, dollar bearish and stuff like that, and I kind of like it even made me want to wait until Wednesday, and when markets came out bullish for foreign currencies, I was like, okay, because there's absolutely nothing I want to do, okay, and not because there's nothing I could do, it's because I was so invested on one side of the market, and that's one thing that earlier this year, I was invested on one side. I switched bias, and market started to trade in my initial bias, and I missed a lot of the moves before I had to join at a later portion. You understand? And I'm like, why did I do that? Why did I have to switch? Now, the reason for this is because this commentary would be me speaking about two sides of the market. Firstly, when DXY traded into this previous weekly low, okay, I'm going to show you something. Let's go to the monthly time frame. Okay. So when DXY traded into this low here, market's still in this fair value gap, in this consecutive down close candles, and this is looking more like an auto block now, because we're seeing more and more downside on dollar index, and this seem like this is a balanced price range. Not seem like, this is a balanced price range. Okay, so if we have a balanced price range here and market is respecting this as a bearish order block, it only makes sense that the market should return down here into a discount. I mean, on a technical perspective. But this is the issue. I've been using the tool for so long, and I'm looking at price action on dollar index, and I know the markets are really, really subjective, because when it comes to defining the drawn liquidity and talking about the long-term bias of the markets are extremely subjective. Now, when I look at price action here, aside from this consecutive down close candle, there is really nothing here that is looking like the markets are willing to offer some level of support from. There's nothing looking like support around here, and I'm like, what I'm looking for, is it from space? And because I can see key levels here, so what is really going on? Because when markets trade into a previous monthly low, when the higher time from institutional flow is bullish, it's likely a torus. Now, it never happened here. I think it never happened here, because what I want to happen is for the markets to draw into this fair value gap here, and the markets trade into sell side again here, running sell side here, still within this fair value gap here. And if I'm bearish here, because market is trading into invalidation, because I never wanted to see the market trade here, because I didn't account for it in my analysis. So as at Friday's close, I thought to myself, okay, I think next week I'm going to sell dollar index. That's what I told myself, really. I said, okay, next week I'm going to sell dollar index. And on Sunday, I thought to myself again, if you were bearish on foreign currencies and bullish on dollar index, and DXY trade below previous monthly low, and now you're bearish, now what's the whole point? Because now you've been induced. That's my interpretation. My interpretation of everything was like, you've been induced. When market trade below sell side, running invalidation, like, you've been induced as a new seller at discount, because now you're bearish at another discount here. And I'm like, oh, this makes sense. So what am I going to do? I think the best thing for me is to be on the fence this week, and that's what I thought about. And since I'm going to wait Monday, okay, and there's FOMC and stuff, I'm going to leave the windows open, because by after Monday's trading, at least we should already be seeing what dollar index is likely to do. Okay, now that the market is traded below sell side liquidity here, because now the market is traded below sell side, and of course this is the monthly level here, and if we look at the weekly time frame, there's a low hanging sell side objective here, so that if we're seeing lower prices on dollar index, so I am looking at this tiny bit of fair value gap here. Okay, I'm looking at this tiny bit of fair value gap here. So if we begin to see bearish dollar index, that's target. So we saw markets trade into this fair value gap here, which obviously at first we wanted to see them completely rebalance first. That's what I wanted to see, and we had that on the market. So last week came with an addition, because we have this 1, 2, 3, 4 candles, and we saw the market close below those candles. So this is an order block, making dollar index even more bearish from a very technical perspective. Okay, so from a technical perspective, dollar index is bearish. There's nothing bullish here. There's nothing bullish here, except if we've seen this candle trade bullish and close above this previous weekly high, and now forming like a sort of bullish order block. Now then there's something to look out for, because if we see this market this week for some weird and awkward reason trade bullish, which we understand that, okay, when that happens, it's high time from institutional order flow, because a run below sell side when the high time from institutional order flow is bullish, because it has been for months now. And it's so crazy and frustrating because it's slowing a lot of things down for me, at least in trading wise. And because of that, I'd have to do it in other pairs like gold. And if I'm doing that, I have total amount of risk I can take in a single week. So I'm managing risk. And if I take just a quarter of that risk on something else, and I'm not doing anything on my pen, not because I cannot, but because of the rules and system I've put in place, is very, very frustrating, very extremely frustrating. So we have an order block here. Markets close below this consecutive uplift candles, making this a bearish order block, and and this candle here a propulsion candle. Okay, this has become a propulsion candle. So it's an order block inside and another order block. So this is a propulsion block. So if I were going short on dollar index, if I were to be short, I'm first going to wait for Monday's trading, obviously, to see if the markets are going to return into a premium. And what premium is that? I'll see if they can return into this propulsion candle, so that I understand that markets are going to key enough of a high time frame key level. And when I see displacement or validation on for the forward time frame, and I will be a participant of the move, and subsequently day trade other opportunities, which I haven't done in a while. Yeah, haven't done that in a while. So that being said, we have the propulsion candle here, and we have the previous weekly low, because for some reason, if I do not see the market trade into last week's range, okay, and markets are just staying like this in consolidation, and we begin to see the markets break down, obviously, first thing that will come to my mind is, I think markets are keying off of the previous weekly low. That's the first thing that's going to come into my mind. Okay, but first of all, I want to see Monday's trading, because there's still a tiny glimmer of hope. Not hope, there's a tiny glimmer. There's something somewhere that's saying I should be careful this week, and I should take this week with the benefit of doubt, and in the sense that running below sell side might invalidate your bias in terms of market structure. But when we are dealing with the high time from institutional order flow, everything becomes really, really, really subjective, and this could just be a turtle soup, and turtle soup is just one of those mechanics the markets can utilize to displace or to validate buys and stuff like that. So while I'm bearish this week on dollar index based off of price action, and for the fact that my bias has been invalidated here, and I see an obvious discount level on the high time frame that the markets could draw into. Okay, that's why I'm looking at bearish dollar index now, not because I want to be bearish, or not because of data aligns that dollar index should be bearish. It's because my bias has been invalidated from last week, and all of which was cooked up of from the high time from institutional order flow. And you know, market structure and everything, and there's high time from discount, the markets are likely or can or rationally return into, okay, because all of this is subjective. Okay, if markets don't markets can leave it. That's why we have breakaway gaps. That's why we have high time from institutional order flow entry through. That's why we have lots of insane stuff. Why markets will trade into a breaker and not trade into an order block. Why markets will trade off of the breaker and not return into the fair value gap. These stuffs. So very, very subjective. So instead of processing data after the fact of everything, I am like, okay, so this is it now. I know markets are subjective. I know my bias has been invalidated. Okay, so what I'm going to do is I'm going to define a discount level, which I define here, the weekly fair value gap or the monthly time frame balance price range. Now, how do I engage? Well, first, there's still something within that says, okay, I have to relax because there's a tendency that market, does whatever it wants to do, even from here. And for that reason, okay, I'm like, okay, I'm still observing protocols. Not trading Monday, obviously. I'm gonna see what market does. I'm gonna see how Monday trades around levels like the proportion block and the previous weekly low. These are very important price point because if dollar index is very, very bearish, very, very bearish, markets are just going to key off of the previous weekly low and establish the high time from institutional outflow, which is bearish, and draw into the high time from discount levels. But if they want to take a very, they've been, doing a lot of classics this year, we want to consolidate, okay, and they're going to draw into a deeper premium level, which is the proportion candle. And the proportion candle is what I would likely be expecting for the markets to do because we have FOMC this week, and if they want to consolidate, then no better place than to consolidate into a high time from key level and show displacement again. So I'm bearish from a technical perspective. Doesn't negate the fact that the high time from institutional order flow on the dollar index is bullish, and it's kind of like creepy because finally I'm subjecting myself to market structure, and I know how subjective market structure is, but I do not have a choice. If you can't, I'm not trying to beat them. I mean, they said, and now they are lying, and I would have to use just technical analysis. And these are one of the reasons why a lot of folks mistrust tools like this, because especially periods when there's a huge disparity between the tools and price action and stuff like that, and not everyone has mental resilience to kind of trust their trading system. Okay, and for me it's crazy because I've not had this kind of experience before. I haven't, and it's funny that it's happening, and this is one of the reasons why experience in trading, you simply cannot buy it, because however this unfolds in coming weeks, it's experience for me, and it's only going to make me better as an analyst and as a trader. And these are stuff you really cannot buy. But mind you, I paid for it with patience. I paid for it by being present in the market, and so Euro USD, same thing. I went through Euro USD during the weekend, and I tried to rationalize whatever is going on the market. And I think one of the things that came to my mind is, okay, fine, there's an obvious bullish momentum going on in markets here, and market is traded into this upper fair value gap here, likely to completely close this fair value gap. Now, I wasn't expecting them to close this fair value gap initially, because after Euros traded through buy side liquidity here, I think we're already seeing the high time from institutional order flow as bearish on euro. So, and with the shift in market structure and daily time frame, thus validating even more, downside on euro USD. I wasn't thinking markets would, revisit the fair value gap after the initial rejection. But funnily, price action here is looking bullish, really, and that's based off of momentum and stuff. And I'm not momentum kind of trader. You can imagine a candle that closed very bearish like this and open bullish. Does that even make any sense? It doesn't make any sense. And that's why I said price action is very, 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 very subjective. And when markets are into discount here, we're looking for bullish prices. It didn't matter what this last 6 months candle did. It did not matter, obviously, and markets actually ran bullish. So none of it doesn't matter here, especially when we're talking about the high time frames. It's institutional order flow first, and then you use data to interpret whatever is going on in market structure and candlesticks. It doesn't change. I don't think it will change. Okay. So trying to rationalize everything, I'm saying, okay, fine. What are high time frame levels the markets could likely draw into? Okay, what are the high time frame levels? Well, I was looking at this up close candle here. This also up close candle, and there's a tiny bit of fair value gap here, and it's kind of like a 200 pip range. I'm like, okay, fine. Okay, this makes sense. This is a turtle soup, and I know obviously that this was a reaccumulation into this order block, and markets are running higher, and they could trade here. Now that was very valid. That was very, very valid. And I went to the monthly time frame, and I'm saying a mitigation block here and stuff like that. But also I'm saying that, okay, fine, the market's left a fair value gap here, there's an order block here, and I'm like, okay, like markets is traded into external range, previous monthly high, objective. And when markets hits objective, primarily I want to wait. So I'm thinking, should I be now bullish in Euro USD in a price objective when I'm supposed to be waiting if I had bought Euro USD? And I was like, okay, there's something wrong. I'm now induced at a premium. And even if Euro USD are going to continue upside, I shouldn't be as bullish as I should have been earlier this month. Okay? So it's me running through my thought process, running through how I look at the market, and defining very logical conclusions to it. So even if I've rationalized a premium buy side objective, I'm not going to go in this week rushing to take a trade because I missed out of last week's trade. No, I'm not going to do that. I'm still going to apply the same things. Now, you'll be doing yourself a disservice really if you think my commentary is just talking, because I'm teaching psychology too. I'm teaching you that you need to process your emotions before the start of every week. You need to process your emotions. You need to talk to yourself. You need to ask yourself those questions you're afraid to ask yourself. Because if you do not process your emotions, you're just going to go in the next week and you're just going to mess up. You're going to speak without confidence. You're going to trade without confidence because you absolutely do not know what you're doing. Every week is a freaking war. It doesn't matter if you took a trade last week or if you didn't take a trade, or if you took a loss or if you didn't take a loss, or if you were profitable in the previous week or if you weren't profitable in the previous week. It doesn't matter. If you do not process your emotions accordingly, it doesn't matter if I had a banger week. Funnily, last week I was profitable. That was just funny. But I was pissed because I had expectation and I wanted to make money because the boy needs money. The boy needs money to do stuff. And where else am I going to get the money from? And I'm behind schedule. So behind, extremely behind. because market has been really, really slow, and I've been really, really disciplined. So that's one of the downsides or negatives of being disciplined. You're gonna miss out a lot. Periods when you're supposed to just adapt, you're not gonna adapt, not because you cannot, but because you're following some rules that keeps you safe. For periods when adaptation might ruin your account, you're not gonna adapt. You're just gonna play by the rules, and that's trading. And if you do not recognize all of these things during the weekend, if you do not tell yourself that this is why I did what I did, you're just gonna go in the new weekend. You just be loose. That's the word, and that's what the market causes, individuals to do. They want them to be loose. So when you lose, they mess you up. Because when you lose, you're not trading out of logic or your defined set of rules. You're trading out of emotions. Basically, how you feel. Okay, I feel like this should happen. I feel like, and your feelings don't even matter. Really, your feelings don't. I was talking to a friend and I was like, why do people think their feelings matter, really? Nobody cares about your feelings. Your emotions don't matter. Your dreams are not valid. Nothing is valid. Because even Jesus Christ, he died for his opinions. They killed him for his opinions. So, and you think human beings actually changed after 2,000 plus years? You think we changed? I'm sorry. Human beings didn't change. Nothing has changed. Technology made life better, but lots of people still live in poverty. In my country, in West Africa, like there's poverty everywhere. The leadership very greedy, taking so much money, and they don't mind stealing more of the public funds. And the people pointing fingers, really, they're just as bad as the leadership, and that's the most insane part. Because you think that, oh, this person is speaking for the people and stuff like that. If you put them in the same position, they're going to do worse. So it's as if we're presented with, okay, we know this kind of evil, okay, and we are comfortable with and dealing with this kind of evil. Let them do whatever they want. But if you put in someone who comes from a poor background, someone who hasn't really reinvented themselves, and you put them there, they're going to ruin everything about the country. Because these leaders, they may be criminals, but at least to a large extent, they've stolen enough to be well-to-do. So you still would not be able to imagine why they still steal. I can't give that explanation. But then they are of like the lesser evil. I don't like this is turning very political. That's not what I want my post to be about. It's not for me to rant. It's just for me to just come here, talk about analysis, my perspective of the market, and my experience, and just go out. But some other times, I think this kind of conversation are pretty much important because it just allows my listeners into my thought process more than Forex. How does it think? Because if high time frame institutional inflow is bearish, I shouldn't be wanting to be bullish when market trades above a previous monthly high. So let's just go through the weekly time frame, then we'll wrap this one up. So obviously, I am looking at a high time frame draw on liquidity here. We went through that on 3 months time frame, and like the dollar index, I have this. Okay, I have this, the previous weekly high. So if Euro USD is bullish and Euro USD returns into, because we're already seeing downside here, returns here, I'm gonna see sponsorship and I buy, and I will target here. Obviously, collapse partial profits here, but not so much. Okay, I'm likely to hold the majority of my trades until a final objective. Now, if by chance something extraordinary happens and Euro USD runs into the previous weekly low. I mean, that's it then. That's it. But I'm going to be careful. That's why when USD trades into a key level here, I'm going to say validation, high time for institutional overflow, and then I engage, then I hold. But if USD trades here and continues to trade lower, probably wait to FOMC and then I'll engage. And likely I'll be thinking that, oh, I think they're bearish. Because I told you, in as much as I'm bullish, why am I bullish? I've rationalized high time frame objective somewhere here, and market has invalidated my bias based off of market structure. So personally, based off of market structure, my bias has been invalidated. But if I think about how subjective the markets are, it doesn't make sense. This is not invalidation because the markets could trade above a previous high and trade lower. That's turtle soup, obviously. So I'm very self-conscious, self-aware of price action on markets. But this week is just the only week I'm finally willing to buy Euro USD. Now I will see a bullish setup and take. Previous weeks I'm not taking, but now I'm taking. So that's what this commentary is about. I'm bearish, still bearish based off of the high time from institutional overflow. But if markets show me bullish price action, bullish setups, I'm gonna take. Okay, I'm now willing to take, but everything still remains. So I hope you found this one insightful. Until the next one, be safe.